We start off with the latest developments stemming from House Speaker Nancy Pelosi's highly controversial visit to Taiwan. We're seeing the first response from China, with one battery maker putting plans for multi-billion-dollar North American plants on pause. Let's get to Phil LeBeau for the details here. Phil.
Melissa, the battery maker is CATL, the largest battery cell supplier in the world. And there is a report this afternoon out of China that the company, which is in the process of looking at a possible location for a $5 billion EV battery cell plant, either in the U.S. or in Mexico, that they're putting that announcement on hold. At least that's the report from Reuters out of China. Keep in mind the importance here is that that plant would supply Tesla and Ford here in the U.S. As you take a look at shares of Ford, keep in mind that the CATL battery plant, once it's online, would supply lithium phosphate batteries to Ford. Those are the lower cost batteries starting next year for the Mach-E as well as the F-150 Lightning. Now, this is an announcement that's on hold. It doesn't mean that they're scrapping the plant altogether, and that's why I don't think we're seeing a huge reaction on shares of Ford. As for Tesla, remember, CATL already supplies battery cells for Teslas that are manufactured in China. They have a long-standing relationship, CATL does, with Tesla in China. And finally, as you take a look at shares of CATL, keep in mind that this is an announcement that reportedly has been put on hold. The company, according to the reports out of China, would likely still make an announcement maybe next month, maybe in October. But clearly, this announcement coming today that they are putting a site selection on hold is clearly in response to Nancy Pelosi being in Taiwan. Melissa?
It is interesting timing, Phil. Thank you. Phil LeBeau. Markets broadly took a leg lower as these headlines were crossing, with the S&P giving up gains, ending the day down 2.33%. A heavy dose of hawkish Fed speak didn't help either in terms of the action today. So what do you make of it all, Tim?
I think the Fed speak was more important. And I don't want to underestimate the importance of China-U.S. relations and where those tensions could go. And where we don't want them to go. But when I think about what's most important for the market here, it's what has had the most impact on the market to this point, which has been Fed speak, Powell last week, something along the lines of that, I'm closer to neutral or I'm at neutral, which I don't believe. And I'd certainly be disappointed if they felt they were at neutral. But again, we have Mester, we have other folks out there who are voting members of the FOMC reminding everybody, hey, look, we were at 390 on Fed funds as we got into next year at the peak in June after the hawkish June meeting. We're down to 320. I'm not sure that's where we belong. Equities love that. Look at the semis, which were up again today before closing a bit lower. But, I mean, you have a dynamic here where you've had a 27% move in the parts of the market that are most sensitive to lower interest rates. And so, again, the Pelosi visit to China is geopolitical complexity of a larger nature than I think the market was really paying attention to today. It doesn't mean companies that want to secure EV supplies, and we heard that from GM and Ford, GM going out of their way to say they've actually secured out the next couple of years. But today is all about the Fed.
Right. We were just talking yesterday about how we were worried that the markets were already pricing in a pivot. And then we got this, they trotted out the Fed speaker saying, you know what, don't price in a pivot yet. It's way too early. We've got a lot of work to be done.
Right. I thought exactly right. And I agree with Tim completely. At the time, we sort of all thought, wow, that, was it hawkish? Was it dovish? You hear whatever you wanted to hear. I think we all agreed that it sounded very hawkish. And I think that they then sent out the troops, and the troops delivered the message that they wanted the market to understand. We're nowhere near done. Inflation is still way, way, way too high. We can't even begin to think about slowing down or pivoting or whatever you want to call it. And if a recession is the byproduct of that, so be it. We got to live with it. So I think that was a lot of what weighed on the markets. But also, it was just, a little sigh after a gigantic run. So we just went back to where we were, I don't know, Friday afternoon maybe. So
to put it into perspective. Yeah. I mean, we mentioned what's going on in China because at the margin, at the very least, this is yet another reason to be cautious here. It's certainly not a reason to be constructive, Courtney, on top of the uncertainty we have regarding what the Fed is going to do or not do.
Yeah, and I think it does just add to some geopolitical uncertainty here, and especially it's going to affect things like your semiconductors, right? Because that's a lot of your semiconductors actually coming out of Taiwan. So I think that could be something that is going to be overweighing a little bit and might actually weigh on your semiconductors on top of any demand problems that they might be having right now. I think it's really too early to trade on anything like that. It's really not directly affecting the markets, at least at this point, but it is something to keep our eye on, if nothing else.
Yeah, Jeff, what do you think?
Well, listen, I think the added risk is problematic in the sense that there's this narrative developing that the market sold off a lot, things are cheap, but things are getting less cheap. You know, I know we've talking about this economic slowdown for some time, the need for EPS expectations to come down. They have fallen. So look out to 2023 price to earnings ratio. It was about 14 times, so kind of cheap. Now 17 times as expectations start to come down. So I think that's interesting as EPS comes down, that sort of strain on valuation increases. So any additional risk that the market has to deal with, whether it's geopolitical uncertainty or otherwise, it becomes more problematic as valuations rise. And valuations are not rising for necessarily a good reason. So I think that's maybe the most important thing to pay attention to right now. Relative to what's going on with Pelosi in Taiwan, I mean, listen, I think that regardless, China and the U.S. was on a collision course. I think you'll have a bunch of saber rattling right now, but make no mistake, Taiwan is basically the most important country on earth right now, and how this fight is going to play out over the long term is very hard to predict. I think if you're trying to play the long game, it probably means more U.S. company onshoring, localized supply chains. I've talked about applied materials in terms of semiconductor equipment and more factories needing to be built. So those are all things to consider, but I think the first point about earnings expectations coming down, the stress on valuations, that's the key.